Hello everyone. I hope you're doing good, mentally and physically fit and fine, friends. So, we are through with the 7 sessions, lovely 7 sessions, and we have covered 7 chapters. And those chapters which are considered complicated based on standards on auditing. So, we have seen a lot of complicated questions, lovely questions, their answers. It has been a fantastic journey, guys. Thanks a lot. I ask for only 2 things. Keep sharing our content, our notes, our lectures with everyone, your colleagues, your juniors, your seniors. You can keep sharing with them and do put your lovely comments. Once lecture gets over, it really matters a lot. It energizes us to give better and better to you guys. Okay. In this particular lecture is going to be very important. We are going to cover 3 chapters. Chapter number 8, that is 800 series. Then chapter number 9, that is 4000 series. Okay. And chapter number 10, that is 2000 series, guys. 2000 series. So we are going to cover around 26 questions. Around 26 questions we are going to cover in this particular session. Let's see, guys. You can get list of important questions. You can get list of important questions from the description. The instructions are given in the description. You can also get the class handwritten notes from the instruction given in the description. So guys, let's start. Be positive. Enjoy the session. Enjoy the lovely questions which Institute has drafted. And this is going to be a very important session especially because this is on all the new topics which are there. Let's see, guys. So we are going to, first of all, we are going to see in the 8th chapter, we are going to see, guys, around 3 standards on auditing, 3 essays, essay 800, 805 and 810. We are going to see essay 800, then 805, then 810. Let's talk about 800. So we all know that the basic principles and the format which is used for preparing financial statements, that's called financial reporting framework. Framework which management follows, that's called applicable financial reporting framework. Now all the frameworks can be divided into 2 categories: special purpose financial reporting framework and general purpose. Now what is general purpose? Framework which is prepared for public at large to fulfill information needs of everyone. Overall shareholders, overall government and bankers, financiers, and so on. Then that is called general purpose financial reporting framework. Financial statements are called general purpose financial statements. If you want to make audit report for general purpose financial statements, you have to simply follow SS 700. But if you are doing audit of special purpose financial statements, so special purpose financial reporting, it is meant for specific users. It is prepared for the information need of specific users. We are going to study about that. Then apart from SS 700, you need to follow 800. So 800 tells us if you are doing audit of special purpose financial reporting, special purpose financial statements, then what specialties, what special things, what additional things you are supposed to do. And guys, it focuses on simply 2 things. It says that because it's a special purpose framework, it's a new framework, it is special purpose framework, people are generally not aware about special purpose framework. It is management's responsibility when they prepare notes to accounts. When they prepare notes to accounts, they should explain in notes to accounts that financial statements are prepared as per so-and-so financial reporting framework, what is the source of the framework, and for whom it is useful. You should explain in notes to accounts. And auditor should also highlight in his audit report that these financial statements are not general purpose. These are special purpose financial statements prepared as per so-and-so framework, so-and-so people. Auditor should alert all the users that it is not a regular financial statement, it is a special purpose financial statement. So essay 800 focus on very simple thing. As a management, you also highlight special purpose framework. You also highlight special purpose framework. And as an auditor, we will also highlight in our audit report special purpose framework. If we both highlight, people will get educated, people will get aware about the special purpose framework, and they will interpret financial statements properly. Then 805 is for, nowadays 805 is for single financial statement, not the complete set of financial statement. When we talk about complete set of financial statement is balance sheet, P&L, other comprehensive income, changes in equity, cash flow statements, and so on. But nowadays, there are new types of audit. Audit only of financial statements. Single financial statement. Audit only of balance sheet. Audit of only balance sheet. Audit of only P&L. Audit of only cash flow statement. Audit of only other comprehensive income. Or specific element. Say only income, expense, specific element, only current assets, only current liabilities, only content liabilities, or specific item, particular account, particular item. So if you come across such kind of audits, see, all the basic auditing principles will apply, SS 200 to 700 everywhere. But these standards tell us what extra and special we have to do. So what extra we have to do in these kinds of audit. Then 810 is on summary financial statements. So if you are doing audit of summary financial statement, what are special things and important things you are supposed to do? So guys, let's freeze. This particular chapter is going to deal with three standards, SA 800, 805 and 810. 800 focuses on special purpose financial statements. 805 focus on single financial statement, specific element of financial statement, particular item of financial statement, and then 810 focus on summary financial statements. So this chapter is going to focus on 800 series, guys. 800 series. Now let's see. Let's see one by one. So first thing they are asking is that, okay, 800 deals with special consideration, what special things, extra things should be done when we are doing audit of special purpose financial statement. Now the first question is, they are asking meaning. They're asking meaning. What do you mean by special purpose framework? They're asking meaning. What do you mean by special purpose framework? Let's see, guys. It's pretty simple, straightforward. What is special purpose framework? A financial reporting framework, which is a financial reporting framework which fulfills information need of specific users, It is prepared only for specific users. That's called special purpose framework. Let me give you examples. RCC is the example. Now R stands for regulator. Suppose regulatory authority instructs companies in the industry that you have to prepare financial statement in so and so format for us for the analysis purpose, and they issue a regulation. So now these financial statements are useful only for the regulator and not others. For example, suppose Telecom Regulatory Authority of India sends an email to all the telecom companies that, listen, telecom companies, you prepare financial statements in 7 columns. And these 7 columns are 7 different regions of India from the telecom point of view, and you tell us how much you have earned in these 7 categories. What is the earning? What are the expenses? What's the profits? What's the assets? What are the liabilities? Because they're very useful for us to determine the spectrum charges. How much spectrum charges should be there? So you prepare it. Now telecom companies will prepare 7-column balance sheet and P&L. It will be useful only for TRAI and not anyone else. So when regulatory requirement is there, because of that, special purpose framework, so because of regulatory requirement, you can have special purpose framework. Then RCC. So RCC is simply a cement structure. RCC. Okay. RCC. C stand for contract. C stand for contract. Now, and C stand for creditors. What is contract? Very popular. Suppose you and I, we have a contract that we will run a joint venture, JV. We will run a joint venture JV. And the last 2 pages of the contract, they explain what is going to be format. It explains what is going to be format of financial statements, okay, and what disclosure should be given in notes to accounts. So contract may also finance contract, operational contract, partnership contract. It may specify what should be the format and principle used for preparation of financial statement. So again, it is only for those who have signed the contract. It is for limited set of people. It is for limited set of people. Again, that's a special purpose framework. Creditors. Creditors may send instruction to company that listen, prepare your balance sheet on liquidation basis, on cash basis. Prepare your balance sheet on cash basis. All the assets on realizable value, all the assets on realizable value, all the liabilities on payable value, assets on realizable value, liability also, liability on payable value, okay. And as creditor, we want to know how much net assets, how much, whether anything will be left for us, and how much net assets company is having, whether our money will be repaid or not. Now this analysis is useful only for creditors. It is not useful for others. So these are example, guys. Now further, now we know the meaning, we know the examples. So guys, we know meaning, we know examples. Few more things. This special purpose framework can be a fair presentation framework, or it can be a compliance framework. I hope you are aware what do you mean by fair presentation framework. Fair presentation framework says that true and fair is the most important thing. Neutrality is very important. Understanding of financial statement is very important. And it gives either of the two permission. Either it gives permission to amend requirement of financial reporting framework, change the requirements, or give additional disclosure. But people should have proper understanding. Fair presentation should not be compromised. So if any framework which says that you can do any of these two things or both the things for a neutral, a proper presentation, that's called a fair presentation framework. Framework which doesn't give such permission, that's called compliance framework. So special purpose framework can be a fair presentation framework, or it can be a compliance framework, friends. Further, what will be the form, what will the form, what will be the format, structure, details, notes to accounts, everything depends on what is written in the framework. The requirement of applicable financial reporting framework determine the form and content of financial statements. These requirements also dictate what constitute complete set of financial statements. So basically, they are explaining applicable financial reporting. Now, it depends on applicable financial reporting framework. So whatever framework company is management is following, that's called applicable framework, and it is going to govern everything. So you explain what do you mean by special purpose framework, you give the examples, when you explain that it can be fair, it can be compliance, and whatever framework management is using, that's applicable framework, it is going to govern form, content, format of financial statement, and what's going to constitute complete set of financial statement. So a very simple, guys, don't think that it is just a theory question. Don't think it is just a theory question. They are going to twist, redraft these questions only, and again ask in exams, and that time you should be very comfortable answering it. So whatever is in the important list, you should cover it thoroughly, properly. Now guys, next is very interesting again, that see what's the situation. So we have an auditor, CA Lakshmi. She prepares a draft report. Okay, on financial statement. These financial statements are prepared as per contract. So whenever you see the contract, that means it is prepared as per contract. It is for specific users. It is a special purpose framework. It is a special purpose financial statement. So moment you see contract, guys, you should always know that it is a special purpose framework. It is a special purpose framework. Now, and she plans to give an unmodified opinion. Okay, that's fine. She is preparing audit report on special purpose financial statement. It is a unmodified opinion. She wants to highlight in her audit report, that financial statements are prepared as per special purpose financial reporting framework, and you can get all the details in note A to financial statements, which is base of accounting. So management has given note A regarding basic of accounting. How should you ensure that should ensure that this report is not misused? Draft a suitable paragraph. Draft a suitable paragraph. Okay guys, let's understand. You can use titanium book or your concept book or module, whichever you are comfortable with. Now let's understand these two things, guys. It's very simple, straightforward. So as per SA 800, the most important, the principal requirement is, if a special purpose financial reporting framework is used, management is supposed to explain the basis of accounting, the new way of accounting, a new framework in their notes to accounts. An auditor is supposed to explain two things. First, he is supposed to alert everyone. First, he is supposed to alert everyone that listen, it is a special purpose financial statements. It is prepared as per so and so thing, and it is suitable for so and so persons. It is suitable for so and so person. So it may not be suitable for others. We need to alert people. It is suitable for so and so person. It is not suitable for. It may not be suitable for others. May not be suitable for others. Now, what they have written in practical life, special purpose financial statements are prepared, and many time it is prepared for regulatory authority, and they may put it on the website. We prepare it for TRAI or RBI or SEBI, and they simply released it on the website. So many times this happens that special purpose financial statement prepared for specific people, but then shared with larger audience. So larger audience, it can become public record. So in this case, auditor should alert that it is for specific users and may not be suitable for other people. It's very simple. Always in the audit report, you always mention, that these financial statement may be shared with a lot of people. So alert people that it is useful only for certain set of people, specific users. It may not be suitable for others. So first thing is to alert everyone that it may not be suitable for you. Then next, so we have to write this in the audit report. Next, we need to explain that because it is suitable for certain set of people, please don't distribute it to others. Please don't distribute it to others. And it's a request that others should not use it. Use it for others, it should not use it for their purpose because it may not be suitable for them. Please don't distribute. It is for specific users. Please don't distribute and don't use it. Don't distribute it and don't use it. It may not be suitable for you guys. Okay. And you can have a heading accordingly. So heading can be heading can be very simple. It can be simply basis of accounting, and if there is a restriction, base of accounting and distribution or use. So two things: highlight and alert everyone that is special purpose. Then talk about restriction. Don't distribute, don't use. No restriction, don't distribute and don't use this for any other purpose. Okay. Now, so two things: alerting people and alerting people and then putting restriction on them. Please don't do that. If you do that, we are not responsible. So that's what. Give reference of SA 800. Then the concept that we need to alert. We need to alert the users. Then we need to restrict. Then we need to restrict users. Finally, drafting the paragraph, that's a heading. Basis of accounting and restriction on distribution. Basis of accounting and restriction on distribution and usage. Very simple, without modifying our opinion. It's like a EMP only, guys. It is an example of EMP. We give heading, we tell people without modifying our opinion, we would like to draw attention to the point note A of so and so, which are prepared as per the requirement of contract, and it is suitable only for certain set of people, so it is not suitable for others. Please don't distribute and don't use, not be distributed or used. So we alert people and we restrict people. That's how we do it. We need to put heading, base of accounting and restriction on distribution usage. So we need to alert people about base of accounting and restrict their distribution and usage. A special paragraph is introduced. It's like an EMP paragraph. It is at the end of, after opinion, it will be written. So guys, it's very simple. It's very simple, straightforward. I hope you are getting it. So guys, we are going through 800 series. We saw a lovely example. What do you mean by special purpose framework and examples? Then we need to do two things, alert and restrict people, and the actual paragraph, we have seen that, again lovely. So guys, it's very simple, it's very interesting. Each and every case study is very interesting. It is coming straight away from study material. Very high chances that it will be targeted in exams. Let's see. Now again, a beautiful question. So guys, these are lovely questions. Some of you must be listening to this concept first time. It's absolutely fine. They're pretty simple. Simply listen to them and you will be catching them. Now, and by doing this question, it will make a base. By doing these questions, it's going to make a base for you guys. It is going to create a base, a lovely base, and then after that, maybe studying some of it, studying again, you are going to enjoy it more and more. Now, signing multiple reports, again a very beautiful simple example. So we have an auditor of the company. She is already doing audit. She's already doing audit of financial statements. Now she is offered one more audit, that financial statements are prepared as. She is again offered audit, that you only do audit of these financial statements. So whenever I said that financial statements are prepared as per agreement or a contract, that means it's a special purpose framework. That means a special purpose financial statement. So the situation is, she is doing audit of general purpose financial statement also, and she is doing audit of special purpose financial statement also of the same company. She is planning to put other matter paragraph. Will that be fine? Okay, so let's understand. First, as per SA 800. SA 800 doesn't put any kind of restriction. SA 800 doesn't put guys any kind of restriction. Okay, it says that a chartered accountant can do audit of general purpose financial statement, as per general purpose financial statement, as well as special purpose financial statement, both. Audit can be done for general purpose financial statement also, and audit for special purpose. Same person can do it. SA 706 says that when you sign multiple reports of the same company, same financial year, there can be confusion. Okay, so for clarity, you should put OMP. You should put a OMP in general purpose financial statement in the audit report and say that there is one more financial statement which is special purpose financial statement, and there is a separate report on it. Do refer that also. And in special purpose, right, it is a special purpose, is on special purpose financial statement. There is one more report, general purpose financial statement. We have signed that also. For understanding, you can read that also. So we are going to refer each other so that there is absolute clarity. Whoever is reading general purpose, they know that there is a special purpose. Whoever is reading special purpose, they know there is a general purpose. They will not get it confused. They will not get it mixed, and they will respect and understand both. So it is clear that yes, you can put other matter paragraph. You can definitely put other matter paragraph as per SA 706. So as per SA 800, doing both the audits is absolutely fine. 706, giving OMP is absolutely fine. So discuss the case, and the conclusion is, yeah, go for the OMP. So guys, lovely cases, lovely cases of SA 800. We are through with SA 800, guys. Okay. Hope you are loving it, enjoying it. Now, next is 805. Next is 805. So single financial statement is only balance sheet, P&L or cash flow statement. When you talk about elements, so elements may mean incomes, expenses, assets, liability, income, expenses, assets, liability, current assets, current liabilities, contingent liability, and so on. Account means specific account, sales account, receivable account, one particular account, or item, particular customer or income, transaction, and so on. So nowadays, a new audit is becoming famous. That is audit of single financial statement or audit of single element of financial statement or a particular account or particular item. Particular account or particular item. Guys, it's getting very famous. Okay. Now, so if you're doing such audits, SA 805 will get applicable. Requirement of 805 will get applicable. So how it's going to be different from the regular audits, that's what SA 805 is going to explain. Let's understand the first question. Let's understand the first question that now, a very interesting one here now. CAG Ganesh is offered appointment for the audit of trade payable, only trade payable. So he's offered audit of element of financial statement, audit of account of financial statement, element or account of financial statement. However, financial statement prepared are audited by CA Jignesh. Okay. So question is, auditor of regular financial statement is someone else. Audit of regular financial statement is someone else. And audit of element of financial statement is someone else. Can this happen? Guys, SA 800 I'm saying has no restriction at all. Someone can do audit of general purpose, someone else can do audit of special purpose, absolutely fine. On the same lines here also, one person can do audit of general purpose financial statements, annual financial statements, and one person can do audit of single financial statement or element or account or item. They can do audit, absolutely fine. But person should be careful. Why person should be careful? He should see whether it makes practical sense. Whether it makes practical sense to do audit of single financial statement or element or account balance. Is it making sense? And they're explaining how to decide that. Okay, so guys, here it is. Second point, here it is. Now, sometimes if another chartered accountant, sometimes if a person another than the person who did audit of financial statements, audit of the complete financial statement, if the person who is doing audit of single financial statement or element or account balance is different from the auditor who is doing audit of complete set of financial statements, the new auditor, the new auditor doing audit of the single financial statement or element should think carefully, is it practical? So if regular audit is with audit of complete set is with one person, audit of complete set of financial statement is with one person, and audit of element is with the another person. In this case, auditor should carefully think, is it making practical sense? Is it practical? Is it making practical sense? Is it practical to perform this audit as per standards on auditing. So we need to see three factors: UAD, would, okay, would, UAD, understanding. U is for understanding. Whether the new auditor is having same kind of understanding of entity and environment, same kind of understanding, of the entity and its environment, which a regular auditor, which a general auditor, a regular auditor generally has. Okay, understanding of the entity and its environment. So if such thing is happening, go and see whether the new auditor is having same. It may happen. He did audit of this industry quite long. He did past audit of so and so company. So he's all comfortable about the industry, about the entity. So first, then A stand for accounting records or other accounting information. Whether he will be able to understand general quality, very important, overall general quality of accounting records and quality of information given to them. General quality of accounting records, other information which is given to them. So guys, we are supposed to see whether the new person will be having overall that, whether these account systems are reliable, whether the report generated are reliable, whether overall accounting records are reliable. Okay, so these factors need to be evaluated. Can a chartered accountant who is not an auditor can do audit of single financial statement or element of financial statements? Very simple. It's very simple. Yes, you have to see whether it's practical. You have to see three things: understanding, understanding of the entity and its environment, quality of accounting records, and then very important, you have to check whether it is disproportionate, whether it is disproportionate work. For example, auditor gets the audit of only element fixed assets, but then going concern is doubtful. Now going concern doubtful is a very big exercise as per SA 570. There are 3 steps involved. Whether very big work. Step number 1, significant doubt or going concern. Step number 2, additional procedures. Step number 3, conclusion and reporting. It's a very time consuming. You are checking only fixed assets, but you are supposed to check going concern. So work is getting disproportionate as compared to opportunity and fees which we are getting. If that's the case, again, don't accept. If this happens, it's not suitable, go to the management, say that the way you are offering this assignment, it is not practical. So we'll say that reframe it, make another type of engagement. The auditor may discuss with management, while another type of engagement might be more practical. It may be more practical, maybe only review assignment or so on. Let's freeze, guys. Let's freeze. So whenever a different person is offered it, you have to see whether it is a practical thing, understand entity, whether the person having same level of understanding of entity and environment, see that. Where the person has equally good, just like regular auditor, good knowledge about the accounting systems, accounting records, and whether it's supposed to do disproportionate work. If these three things are positive, then in that case, guys, if these things are positive, we may go and accept the assignment. If not, we may reject the assignment. If it's not practical, we'll ask them to change it. If it's not practical, guys. Okay. Now, so changes can be, guys, changes can be anything, guys. Changes can be a lot of changes. We may say that make a bigger thing, not just not just current assets, give us the complete asset side, give us complete income side and so on, to make it more practical and feasible, to adjust the disproportionate work and so on. So guys, these are lovely questions which we are seeing. We are already through with 800 series, and this was a lovely question that whenever you are given this opportunity, you are supposed to evaluate it. So 805, first question, that if you are if a person other than auditor is getting offered, be careful, see if it's practical, see these things, these three factors. If it's practical, then only go for it. If it's not practical, ask for a bigger share to be audited. Again, a lovely question, guys. Okay, just a minute, guys. Just give me a minute, guys. Just a minute. Okay, guys. Now, very interesting again. Suppose complete audit report on complete set of financial statement is having modifications. There's a qualification, there's an adverse, there's a disclaimer, or an EMP or OMP. Now the complete set is having these issues. How it's going to impact audit report on single financial statement or audit report on element of financial statement? How that is going to affect this one? If a same person is doing it, how the audit of complete set is going to impact audit of single financial statement or element? Let's first see, let's take an overview first. See, this is a very simple summary. So whenever, what is it saying? Very simple thing. Very simple thing. If complete set of financial statement, there is a complete set of financial statement, and if there is a modified opinion, and if there is a modified opinion, there is a qualification, there is the adverse, there is a disclaimer, there is a EMP or EMP, consider the effect. Consider, is it having impact on that single financial statement or element or account balance? Is it having an impact? It may have an impact, it may not have an impact. If it's having impact, then include it. Okay, that inventory is overstated, depreciation is undercharged, or whatever, include those. If it is affecting single financial statement or element or item, include that modification, that respective modification and its basis in the audit report. Sometimes it may impact, sometimes it may not impact. For example, there's a problem with depreciation, but I am giving report on current assets, so it's not having any impact. And if I am giving audit report on balance sheet, it may have a complete impact. Okay, then they're saying if on the complete set you are giving adverse or disclaimer, that's a very big thing. You are saying, see, whatever single financial statement or element of financial statement or item of financial statement, they are derived, they are taken from the complete set. Okay, if you are saying that complete set is adverse, on complete set you're giving adverse, that complete set is not at all reliable, or disclaimer, then you should not give unmodified opinion, you should not give clean opinion on single financial statement or element of financial statement. If you're saying that source is adverse, source is disclaimer, then single financial statement or element of financial statement which is extracted from there, don't give a clean opinion. Otherwise it will look contradictory. You are saying that this car is useless, and then you are saying that, oh, what a good engine, what a good design, what a good feel. Oh, this looks contradictory. First you are saying it is all bad, and then out of that you are saying it is good, so it will be contradictory. So don't never give unmodified opinion. But then they give an exception. Suppose if you are doing audit of specific element, only specific element, a very specific element, unmodified opinion can be given if three conditions are satisfied. If three conditions are satisfied, condition number one, it should not be prohibited by law. Law should not prohibit that, okay, here you are, law should not prohibit that you are giving adverse disclaimer here and element you are giving clean. This thing should not be explicitly prohibited. In India, there is no such prohibition. It should not be published together. It should not be in one annual report. Otherwise, people may get confused. Oh my God. First they say adverse disclaimer, and then they give clean report. Same company, same year, one adverse and one clean. But the difference is adverse disclaimer is on complete set and it is on element. Don't publish it together. It should not be prohibited. No publishing together. And it should not be a major portion of financial statement. It should not be major or current asset. It's not a major portion of financial statement. You can give a clean report on that. So if you're talking about specific element, clean report on it, unmodified report on it is possible if it's not prohibited by law, not published together, it's not a major portion, then it's possible. So these are three conditions. If they are fulfilled, you may give a clean report, unmodified report on a specific element. Even though source is adverse or disclaimer, but on element, you can give a clean report. Then there further, it is a clarification in case of single financial statement, even if they are even if they are not published together, even if it is not published together, still you cannot give unmodified opinion, no unmodified opinion. So in short guys, let's freeze. Whatever is impacting the source, we have to take the effect, we have to take effect on the single financial statement element, etc. But then next, adverse disclaimer is there. They first say that don't give clean reports. They give exception to the element if three conditions are satisfied. They are saying that in case of single financial statement, even if you publish it, single financial statement and complete set, even if you publish it differently, that doesn't mean you can give a clean report. That's not allowed. So you can say that exception is only for specific element. Okay. Exception is clean report can be given only for specific element if three conditions are fulfilled. In this case, they are saying that adverse opinion is given on the complete set, and they are planning to give report on simply trade receivable. Trade receivable. Can they do that? So trade receivable is a specific element. You explain the complete theory that it's a specific element. In case of specific element, clean report is possible provided three conditions are fulfilled. No prohibition. No prohibition. It should not be prohibited. They should not be published together. It should not be a major portion. If these three conditions are fulfilled, it is possible. If these three conditions are fulfilled, A, B and C, it is possible. Can express unmodified opinion provided three conditions are fulfilled. So guys, it's a lovely question, beautiful question, a very important concept is covered here. That how modification on complete set affects the modification on single financial statement and specific element of financial statement. Now this one is very simple, straightforward. We are talking about audit of trade receivable, but this is as per contract. If financial statement, any information is prepared as per contract, it is special purpose. So that means they want to say it is a special purpose financial statement, but specific element. Special purpose framework plus specific element. Okay. So let's freeze, guys. It's very simple. SA 805 says that single financial statement, element of financial statement, items, accounts of financial statement, it can be as per general purpose framework or it can be as per special purpose framework. It can be as per general purpose framework. It can be as per special purpose framework. So whatever single financial statement or specific element we are saying, it can be as per general purpose, it can be as per special purpose. Okay. So 805 covers both the types of audit. Audit of these things as per general purpose and audit of these things as per special purpose. There is no restriction at all. Absolutely fine. Further, if it is a special purpose framework, SA 800 will get applicable, and you need to specify, you need to highlight users and restrict users in audit report. So instead of these, whatever written is a better presentation. That 805 is very broad-minded, that single financial statement, specific element and others can be as per general purpose as a special purpose, and 800 is applicable, apply 800. So it's absolutely fine. Audit can be given, audit can be done and report can be given. No issues at all. Guys, I know that some of you may not have studied. Okay. Some of you may not have studied these standards, but just listen to whatever explanation I am giving. It will create a good base. Further, okay. Further, we have made revisions. We have made revisions of a lot of chapters in English. You can always go to our channel. You can always go to our channel. There's a playlist. Revision playlist is there. We have covered the whole chapter, guys. Okay. So out of 19, I think right now there must be some chapters, and we'll be adding remaining chapters also. But then listen to these sessions, make a base, listen to the revision, and then you can go for more things. Very high probability that these questions come. We are covering the whole module only in these standards. So guys, we are through with lovely 800 and its requirement of special purpose framework. We are through with the 805, which talks about single financial statement, element of financial statement and item of financial statement. Now the next is, guys, factors affecting acceptability. Factors affecting acceptability. Now 810 is on audit of, summary financial statement. It is for audit of guys, summary financial statements. Summary financial statements. Let's see. Now, the most important thing, now this is not in 800, this is not in 805, it is specifically in 810 only. Only the person who has done audit of complete set of financial statement, only that person can do audit of summary financial statement. Summary is derived from the complete set. So if someone has done audit of regular financial statement, only that person can do audit of summary financial statement. This unique thing is only and only there in SA 810. That is mandatory, not negotiable, no exception. Okay. Now, guys, we know about the basic format, the basic principles and format how to prepare financial statement is given in financial reporting framework, and the framework which company is following, that's called applicable financial reporting framework. That is called as applicable. That is called as applicable financial reporting framework. Okay. Now, just like we have principles and format for financial statement, on the same lines, we have principles and format for summary financial statement. Those principles and format is called as criteria. They are purposefully not using the word financial reporting framework because it is used for audit of financial statements, regular financial statement. So, basic principles and format of summary financial statements is called criteria. There can be variety of criteria. Whatever criteria management is using, that's called applied criteria, and it should be acceptable. Just like in SA 210, we have precondition that financial reporting framework should be acceptable. Financial reporting framework should be acceptable. On the same lines, they are saying that criteria should be acceptable, guys. Okay. Now, how to decide whether the criteria is acceptable or not? Let's go to concept 810.040. They are very simple factors they have given. You can go to the titanium book or your any concept book or module as you are comfortable with. Now, okay, let's see. First thing, we know that only person who has done audit of complete set, only that person can do audit of summary. Now, just like framework should be acceptable, we are saying that criteria should be acceptable. Good quality criteria is there. There only will sign the financial statements and so on. So first thing, they explain what they mean by applied criteria. It is management responsibility to understand what criteria is applicable as per law or suitable for preparation of summary financial statement. Select it and then applied. Such criteria is called applied criteria. First you explain what do you mean by criteria, and then you explain what do you mean by applied criteria. Then next you explain criteria should be of good quality. There is a risk involved that summary financial statement becomes misleading. They become misleading. So you should be very careful. There's always a risk that if a criteria is not good, summary financial statements may become misleading because it has less information and grossly aggregated information. For example, it says that just specify current assets. Just specify current assets. Don't give details. But in current assets, if you see current asset, person will think it may have inventory, debtors, cash and bank balance, loans and advances. But the reality is 99% is a loans and advance, and hardly 1% it is cash and bank, and there are no inventory and debtors. So looking at summary, people may have a different interpretation, and in reality there may be a different thing. So this format became misleading. Because of this, things became misleading. There's always a risk that, so you should be very careful. So first explain what do you mean by criteria, applied criteria. There's always a risk that summary financial statement become misleading. Should be extra careful when selecting the criteria. In India, Form AOC3. Form AOC3 is the criteria. Form AOC3 is the criteria on the basis of which summary financial statements are prepared. On the basis of which summary financial statements are prepared, guys. Now, let's see. They are saying that when criteria is shown to you, shared with you, you have to understand these factors. NPI not misleading. NPI should not be misleading. If a criteria is shown to you, so NPI should not be misleading. 4 factors are there. Let's see, guys. So we need to ensure this nothing is misleading. So ensure NPI is not misleading. What is N? N stands for nature of entity. If entity is a manufacturing entity, summary should have manufacturing items. Cost of raw material consumed should be there. If it's into financing, a summary should have interest incomes, expenses. If it's into insurance, it should have premium incomes. So depending on nature of the entity, whether summary is covering important things, that need to be checked. Then you need to understand purpose of preparing summary financial statement. Purpose can be share valuation. Purpose can be share valuation. Purpose can be expense analysis. It can be share valuation. It can be expense analysis. So there can be a lot of different purposes for which summary financial statements. It can be internal analysis. So see, is it suitable? Whether the format is suitable for the purpose. They're planning to value shares using net asset method, whether all the details are given with respect to net assets. If they're planning to value things as per earnings method, see whether proper details are given with respect to P&L. So understand whether the format fulfills the purpose of preparing summary financial statement. I stand for information needs of the intended user. Information needs. Very important to understand what information users want. We need to understand first purpose and what they want. If they want breakup of the salary expense, that how much is given to directors, to senior employees, junior employees, labor, if understand where the information requirement, information needs are getting fulfilled in this format. And it should not be misleading. It should not be misleading. There should not be very big aggregation, not different items should not be aggregated. It may become misleading. So understand it's suitable for the nature. Is it fulfilling the purpose? Is it giving the intended information? And it's not misleading. And one more thing in that, the title should always have summary. That is a summary financial statement, summary balance sheet, summary cash flow statement, or you can use the word abridged. It should be there. So if you want to understand whether the criteria is applicable or not, appropriate or not, first understand the applicable criteria, then understand the risk involved in summarization process, NPI factors, and title should also have summary wording to that. So overall 3 things. What do you know? Applied criteria, the risk involved, and the factors, and the title. It's a long question, guys. Now, very simple, very interesting. What about subsequent events? What about subsequent events? Now, let's understand subsequent events, guys. We know that all the events happen after balance sheet date, till the date of signing report. That's called subsequent events. That is a general thing. Now it is a different thing, guys. Suppose our regular financial statement, complete set of financial statement was signed on 15th of June. 15th of June. And summary financial statements are signed on 15th of July. So they are asking what is the additional reporting requirement. Now, listen, it's very simple. First of all, sometime it can happen there's a gap between regular financial statement audit report and summary financial statement. They may take time to prepare summary and then get it audited and so on. So things may happen in between. There's a different site of subsequent events. Are we supposed to check subsequent events of this 1 month? Answer is no. Summary is a summary of original financial statements. It is a summary of original financial statement. We want to represent original financial statement. We don't want to represent any additional things. So whatever is the time gap, auditor is not supposed to, there is no duty to perform any audit procedure, to collect any evidence. In fact, we'll specify in the audit report that we have not checked any such subsequent events and we have not covered them in our opinion and report. See, guys, this is element of audit report, what audit report is going to have. And there we have subsequent event. If report on summary financial statement is dated later than the report on audited financial statement, sometimes they can be dated on the same date or sometimes it can be dated later. It states that neither reflects the effects of events that occurred subsequently to the date of audit report on audited financial statement. It is not our responsibility. We didn't perform any audit procedure and summary is not reflecting any such events. There is no need. We just want to reflect the original financial statement. We don't want to reflect all other things which are happening in between. Okay. So in summary financial statement, we are not bothered about the events which are happening after audited financial statement and the date of summary financial statement, date of signing summary financial statement. No need to think anything about it. So, summary do not reflect the effects. So, a simple statement is required. They are discussing case and they are discussing reporting requirement. What is asked, and you also explain. You can always cushion that so and so I say. They simply say that no audit procedures, no need to perform anything. Okay, it is not required, and then you explain that in audit report it is not reflecting any events happening after original audit report and the date of signing summary. It is not covering that. Let's not accept that. Let others don't assume it. So in between things, subsequent, no responsibility, no checking required, nothing required. Okay. And put it in the audit report that we have not checked it. Then we have a beautiful concept of denial of opinion. Now, just now we have seen, guys. Just now we have seen a beautiful concept. We have seen beautiful concept, lovely concept. We have seen beautiful concept, lovely concept. What concept we have seen, guys? That how audit report on complete set of financial statement affects audit report on single financial statement and elements financial statement. On the same line, how audit report on complete set affects audit report on summary financial statement. Okay. Let's understand things, guys. When it comes to summary financial statements, in audit report of summary financial statement, we report on two things. If source financial statement has modification EMP, OMP, it is definitely having some impact on some areas of summary. Summary reflects complete financial statement, so it's definitely going to have impact. So whatever modification EMP and OMP, there is a source financial statement. Understand which part of the summary is getting impacted. Which part of the summary is getting impacted. Consider that matter. Consider the complete basis of qualification or adverse or disclaimer, whatever it is. Cover that completely. So whatever is the impact on the source, that should be shown in the audit report of summary financial statement. So first we always tell about, we always talk about summary financial, source financial statement. So what is happening in the source financial statement and its impact. So you always report what's happening on source financial statement in case of summary. And then next, we also give opinion. We also give opinion on the summarization process. Whether the summarization process was good, whether a proper summary is prepared or not as per the applied criteria. So in case of summary, we report about the source. We include the problems and issues in the source and its impact on the summary financial statement, and also we give opinion on the summarization process. Whether summarization process done properly, whether it is a fair summary. Whether it is a fair summary, is it consistent with the financial statements? Okay. So we have to report on two things. Whatever is there, take the impact, give opinion. Further, if source is adverse or disclaimer, source is having adverse or disclaimer, include that in audit report, it's fine. But then don't give opinion on summarization process. If the source is having adverse or disclaimer, if the source is having adverse or disclaimer, consider the effect. Don't give report on summarization process. Why, sir? You will say that, oh, source is adverse or disclaimer, but summary is fair, summary is consistent. It will appear contradictory. Source is so bad, but summary is good. I took the test drive, source is so bad, but photograph of car looks good. Oh, that's quite unusual. So we'll say that it is inappropriate. It is not appropriate to give opinion on summarization, on summary financial statement, whether it's a fair summary, is a consistent summary. And this concept is called denial of opinion. This concept is called denial of opinion. So guys, in case of summary, we report on two things. We report what's the problem with the issue, the source financial statement, its impact on the summary. We also report on summarization process. Now this is a special case. This is a special case. Now if the source is having adverse or disclaimer, if the source is having adverse or disclaimer, okay, then in that case, it is not appropriate to say anything about the summary, and that's not appropriate to give opinion on the summarization process. It's a denial of opinion. Now here there is an adverse opinion. What should be done? Explain the situation that source financial statement, audited financial statements is having adverse or disclaimer, situation is, if it is explain clearly, explain that when the audit report on audit fund contains adverse, the auditor's report on summary shall state that auditor's report on audit, simply explain that yes, in summary say that source financial statement or adverse or disclaimer. If this is the situation, write it in the audit report of summary. In fact, describe it, take the complete basis paragraph and describe what is wrong exactly. Copy paste basis of adverse, basis of disclaimer. And then on the summarization process, he say that it is not appropriate to express opinion on the summarization process on summary financial statements. Okay, it will look inappropriate, it will look awkward, and this concept is called denial of opinion. And this concept is called, guys, denial of opinion. I hope, guys, you are loving it, enjoying it, you are understanding the whole concept. And as I said, if you have a little bit of problem, listen to it again. It will make your base, it will make you comfortable. Now, so guys, we are through with 800, that was audit of special purpose financial statements. Through with 805, that was audit of single financial statement, element of financial statement, item of financial statement. And 810 is about audit of summary financial statement, where we give report on two things. These are very probable, very probable, very probable and very important questions. So guys, we are through with chapter number 8. Okay, so through almost with 10 questions, we have to go through further. Okay, further 10-15 questions. Let's understand this, guys. Let's understand this, guys. A very interesting AUP, agreed upon procedure. So in this chapter number 9, we are going to deal with 4000 series. 4000 series, and we have 4400, we have 4400, and we have 4410. 4400 and 4410. So these two standards are there, guys. These two standards. One is about AUP, agreed upon procedure, and another is 4410. It is about compilation of financial statements. Listen, what do you mean by agreed upon procedure? It's very simple. As name suggests, agreed upon procedure. As per agreement, procedures will be performed. Only those procedures which are given in the agreement, only those procedures will be performed. And whatever facts we come to know, they will be given in the report. It's a very simple, straightforward assignment. Okay, agreed upon procedure. And next is again simple. People call you to help them, assist them in compilation of financial statement, preparation of financial statement. Okay, so what's the first question? May 23 RTP. May 23 RTP. May 23 RTP, it was asked, guys. Actually, it should be old course. There was no new course that time. Okay, let's see. A very simple assignment. So CFO calls us and says that you need to verify trade receivables, debtors, and because there is shortage of manpower, please do these things. Number one, you will be provided list of debtors. Simply check arithmetical accuracy of the balancing of the debtors account, and whether that balance and balance of the list, they agree with each other. Simply go and check arithmetical accuracy of the balances and whether it agrees with the list. Then so explain arithmetical accuracy, and then we first talk about arithmetical accuracy, and then so we are supposed to take arithmetical accuracy. Next, we are supposed to simply get confirmations about the debtors, and wherever there is a difference, a reconciliation should be prepared. So we are supposed to perform only three things: check arithmetical accuracy, take arithmetical accuracy, take the confirmation, and reconciliation wherever things don't match. That's it. Only three things. Only three things. And whatever you get, factual reporting should be done. Whatever you get, factual reporting should be done. Facts should be given. That's it. Don't express any kind of opinion. Don't express any kind of opinion, audit opinion. Don't express any kind of review conclusion. Don't express anything like that. Nothing like that. Simply whatever facts, whether it's accurate or not, facts. How many confirmations you got? Facts. Okay. How many reconciliation you prepared? What's the reconciling amount? Fact. That's it. Nothing else. Let people read it, understand it, and make their own opinions and conclusions. We'll only report the facts. So, can we make an assurance report? The question is, can we make an assurance report? People call us for trade receivable. They say that only three things should be done. Can we give assurance report? Listen guys, people didn't call us to do audit of trade receivables. If they would have called us to do audit of trade receivables, it is covered under audit of specific element, SA 805. No. They called us only for three things. They called us only for three things, guys. Only and only for three things they have called us. Okay. Let's understand this, guys. What we'll do, first we'll explain what is assurance services. In any assignment, when you check whether subject matter, that is financial statements, financial data, is as per criteria, that is financial reporting framework, and you comment on reliability of the information, reliability of the assertions. Assertions is nothing but information coming from financial statement. When you start commenting on reliability of the information, and because of that, confidence of people is enhanced. You comment on reliability and confidence of people is enhanced on the information. They start relying on the information, or depending on report, they may discard the information. Such assignment is called assurance services, assurance assignment. When we talk about related services, similar kind of knowledge and skills are used. Similar kind of knowledge and skills are used. Okay. But in AUP, we perform only limited set of activities and we simply report on factual findings. We don't give audit opinion. We don't give audit opinion. We don't give conclusion of the review. No, nothing like that. So point is, in this case, we cannot give assurance report. We cannot give assurance report. We can report on facts. We can give factual report as per SRS 4400. 4400. I hope it's simple, straightforward. Simply explain what is assurance services, what is related services, discuss the case, give the conclusion. Now, next is assurance versus, we have just discussed, assurance versus related service. See, this is how they make a case study out of that. It was simply assurance versus related services. So, they are going to just make a case out of it. And you need to understand, okay, now this concept needs to be applied. This particular concepts need to be applied. Now, what is assurance versus related services, guys? Let's understand. Assurance, explain. In this, we check assurance services. We check subject matter financial statement with applicable criteria. That can be financial reporting framework. We comment on reliability of the information. It enhances the confidence of people. That's called assurance services. When similar set of knowledge and skills are used, but then we are not giving any kind of assurance. We are reporting simply on the facts. That's called related services. They give example of the same trade payable. Trade payable, check arithmetical accuracy, go for confirmation, go for reconciliation. Very simple. Now, guys, next is how to make report on AUP, agreed upon procedure. how to make report on AUP, agreed upon procedures. What should be the flow? Now let me tell you guys, this 800 series, 2000 series, 3000 series, 4000 series, all of them are based on old audit report format. And old audit report format was pretty simple. They used to give opinion afterwards. First, they used to go for management responsibility, auditor responsibility. They first go for management responsibility, then auditor responsibility, and then they give opinion. That's the only relevant change here. Okay, so let me give you a shortcut how to remember it. Let's see, guys. So first, revise the old audit report. So we have title. So just like we have title in regular audit report, we have title here also in report of agreed upon procedure. We have addressee for whom it is prepared. We have addressee here also for whom it is prepared. Then we give introduction that it is the audit of so and so, it is audit of so and so company, so and so financial statements, introduction. On same lines, we have points here. 2 points related to introduction. We identify the specific information that we are doing audit of trade receivable or trade payable or salary, identifying of so and so for 6 months, for 1 year, for so and so date, and we explain the purpose also. Is it done as per some legal regulatory requirement, or it is done for internal analysis, or is it done for any third party? Whatever is the purpose. So just like introduction, we have here specific information and the purpose. Then generally below this we have management responsibility. So whenever below your report you have certain financial statement or data, you always say that it is prepared by them, not by us. But there in AUP there is no such financial statement below the report, because we are not covering financial statement. So there is no management responsibility, directly auditor responsibility. Statement that we have just performed agreed upon procedure. We have just performed agreed upon procedure with the recipient. We have just performed agreed upon procedure which was agreed between the client and us, and it is done as per this standard. So in auditor responsibility you state 3 things. We have done only agreed upon procedure. It is done as per SRS 4400, and we give list. These are the 3 things, these are the 4 things. So 3 points in auditor responsibility. And just like we give opinion in the old, instead of factual findings, we say that we describe what are the factual findings after performing the agreed upon procedure, AUP. Now we clearly say that, we have to explicitly say that these are factual findings. What we did doesn't constitute audit or review. It is not audit, it is not review. We are not giving any assurance. We are simply commenting facts, and it is not assurance at all. We are not saying good or bad. We are simply giving the facts. It is up to you to interpret it. So earlier then you used to have OMP. So we further, very interesting, we further say that if we would have done more examination, we would have come across more things. If we would have performed more examination, a statement that auditor perform additional procedure, an audit or a review, other matters might have come to light that would have reported. So very simple thing. If we would have done additional procedures or we would have done audit or review, we would have reported more things which we have not, we would have identified more things to be reported. Okay, so we are simply saying that don't feel that this is the ultimate thing. We could have done more. We would have done more. Then this report is only for board of directors, others should not use it. So if we would have done more things would have come to the knowledge. It's not for others. And this is not on the complete set of financial statement. It's only on a specific part. Please don't apply on the complete set of financial statement. So we are going to caution people. We could have reported about additional finding, restrictions, others should not use it. Okay, and limitation, don't apply to the whole financial statement. So we are supposed to talk about these three things. RAL, three things, or ARL, whatever you want to say, and then signature date place. So guys, it is in the same lines like old audit report format. The flow is same. That is audit report on agreed upon procedures. Audit report on agreed upon procedures, AUP. What things, what elements we put. Now guys, next is compilation. Compilation. So first thing is pretty interesting. Suppose you got the compilation assignment where you are supposed to assist management in preparation of financial statement. Whether ethical principles and independence requirement will be applicable. Whether ethical principles. So it's very simple, guys. Ethical principles are given in our code of ethics, and code of ethics is to be followed by everyone. You are in practice, you are in job. If you are in practice, whether you are doing assurance and related services or altogether different services, all the chartered accountants are supposed to follow code of ethics, are supposed to follow ethical principles. Ethical principles. So on the same lines, if you are doing agreed upon procedure, you are supposed to follow 5 fundamental ethical principles. You are supposed to follow code of ethics. Next, very interesting is, what about independence? What about independence? Where the person who is doing AUP, the person who is doing compilation, in fact, it is applicable to AUP also. The person who is doing compilation of financial statement, whether the person should be independent. And the beautiful answer is not required. Independence is required when you are giving assurance, when you are giving reasonable assurance in audit, when you are giving moderate level of assurance in review, when you are giving assurance, independence is required. Here, independence is not required. Can a shareholder do compilation? Yes. Can a relative of director do it? Yes. Anyone can go for compilation. And if you are not independent, a statement should be written. If you are not independent, a statement should be written about lack of independence. That we are not independent because we are shareholders, we are not independent because we are relatives of the director. Very interesting, guys. So if you talk about agreed upon procedure, or if you talk about compilation, ethical requirements should be complied with, code of ethics should be complied with, 5 principles should be complied with, but independence is not mandatory, it is not required. It can be made mandatory as per terms of engagement. It can be made mandatory, but it is not required as per standard. And if you are not independent, specify this. This need to be specified in your report. In your report, you should specify it. Okay. Now, guys, now we know about very good requirement, ethics and applicability of ethics and independence. Next is, what is compilation assign? Now next is compilation. What is the purpose? Compilation, people, so many times people call us to assist them in preparing financial statements. That's a compilation, assignment, that's a compilation engagement. Okay. what is the purpose? What can be different purpose for compilation? So first is mandatory. Compilation of financial statement can be done to fulfill the mandatory requirement, to fulfill legal requirement, like to fulfill Companies Act requirement to prepare financial statement, Cooperative Society requirement to prepare financial statement, Trusts Act requirement to prepare financial statement. So compilation can be done to fulfill the requirement of mandatory periodical financial reporting. If it is mandatory as per any law, rules, regulation, it is done. So if it is required by any law, rules, regulation, so compilation can be done to fulfill that requirement. Apart from that, it can be for internal use. Management just want to analyze how this month was, how this quarter was. So compilation can be done for internal use to evaluate the performances for monthly, quarterly performances, division-wise performances, business-wise performances. For external parties, it can be done for the finances, it can be done for the finances, or finances may want it, funding bodies may want it, those who want to give grant may want it, external parties may want. So compilation can be done for external parties. Transaction for amalgamation, merger, issue of shares, it may be done. So it may be to fulfill the mandatory requirement, it may be to fulfill other requirement like internal use, then bigger than that external use, bigger than that transaction. Inaccurate accounting treated. Inaccurate accounting treatment. Before we see about inaccurate accounting treatment, let's see how to perform compilation engagement, because it is automatically going to cover that also. A very beautiful how to perform compilation engagement. First, what is compilation? Many times management may not be having that expertise, that resources to prepare financial statement as per applicable framework. So they may request chartered accountant to come and assist them, in preparation of financial statement. So when a chartered accountant gets the assignment where he's supposed to assist management in preparation of financial statements, that's called compiling financial statement. Now how you do it? Performing. How you do it? Now how to perform? It's pretty simple, guys. Just like in audit, first we need to understand the business on the same lines. If you want to understand whether things are capital nature or revenue nature, whether accounting policies, if you want to understand whether it's capital or revenue, if we want to understand whether things are capital or revenue, okay, whether things are capital or revenue, guys, capital or revenue, then we need to understand the business. So first simple thing is take knowledge of the business, understand the industry, products, manufacturing, terms and condition, business practices, then understand the framework. Then go understand the applicable framework. If it's AS, understand the accounting standards. If it's Ind AS, understand Ind AS. If it's US GAAP, understand US GAAP. So first point is about obtaining knowledge. Second is, okay, get the trial balance and all related information and compile. Take the trial balance, put it as per the Schedule 3 format, take the information, prepare notes to accounts. Okay, so assist management by putting it in proper format of Schedule 3, by preparing notes to accounts, assist them. Okay. Then discussion on significant judgments. So in general, we always ask management how they have taken the significant judgments. Simply, it's not examination. We want to understand, discuss how the significant judgments were there. Okay, just to understand the logic and the basis. So compile it, discuss it, and sometimes agreement says that we should assist them in preparing significant judgments. So we assist them also. So obtain all the information, compile it, understand significant judgments, and assist them in significant judgments also. First is about taking the knowledge, next is about taking the information and compiling it, obtaining loads of information it can be upon, and it may involve discussion on significant judgment. Next is read before completion, very important. Once you have prepared everything, before you say it is complete, read it once. Read it once, and you may come across a lot of things. You may come across incomplete. You may come across incomplete, inaccurate information. So ask management, give us the incomplete information, give us the complete information, give us the accurate information. If management agrees, great. Now listen here, fantastic. What if management doesn't agree? See guys, in compilation report, we never give opinion. In compilation report, we simply explain how compilation was done. That's it. We don't give any kind of opinion. In nothing. We don't even report on facts. Nothing. We simply explain how compilation is done. Now, it's a very interesting thing. Financial statement information is incomplete, inaccurate. Okay. And management is not ready to give more. What should be done? We cannot modify the opinion. There is no concept of modification. Directly withdraw. Don't be associated with them. Directly, knowingly preparing wrong financial statement, withdraw. Okay. On the same lines, if we came across some material misstatements which need adjustment and we propose the amendments, that things are not as per framework, these amendments should be done, and they withdraw and they decline, we will not make amendments. What? You will not make amendments? We will withdraw and inform people about it. If withdrawal is impossible, if you have ensure that you are reporting as per law, rules and regulation, you are reporting this thing to whoever required. So if there's information is incomplete, they are not doing, withdraw. They are not amending things, withdraw. That's a beautiful, wonderful thing that it is not having modifications. So there's only one solution, withdraw. And lastly, obtain acknowledgement of the responsibility. Take an acknowledgement that it was their responsibility to prepare financial statements and they have acknowledged and they have done it. Okay. It is your responsibility and you have prepared, compiled the financial statements. So 6 things, guys. 6th thing, compilation engagement. First thing, obtain knowledge, do compilation, then read. What if things are incomplete, inaccurate? Withdraw. Amendments not happening, withdraw. Acknowledgement about the response that we have prepared it properly. Get the acknowledgement. It's like a WR for management responsibility. Now, what are we supposed to document? It's very simple. When we go to compilation, we get trial balance. Guys, don't just be worried about exams are going to get postponed for sure. I understand. But don't waste your precious time in the process. Don't waste your precious time in the process. Okay. How many times will you listen whether it will postpone or not? It is going to get postponed for sure. Simply sit and understand it will be postponed. I understand it is creating anxiety. But then, most important, keep your cool and use your present time effectively. Use your present time effectively, guys. Now, let's see. Documentation. So, whatever trial balance and other information, maintain copy of trial balance and all the information, written information which was given to you for assisting management in compiling financial statement. Then how the basic trial balance and compiled financial statement, they agree to each other, how they match with each other. Reconciliation should be prepared and preserved, documented. Final version of the financial statement should be there, a financial report. It's in flow. What you got after compilation, how you reconciled them, and the final thing. Significant matters, all the big matters which arise during the course. Okay, all the important things which arise during the compilation, all those significant matters should be preserved. So guys, we are through with 4000 series also. 4400 was agreed upon procedure, and 4410 was about and 4410 guys was about compilation. Let's see one more chapter, last chapter for the day. There is 2400 and 2410. 2400 and 2410. Now let's understand. If practitioner, any chartered accountant is appointed, that you review financial statements. You review financial statements, whether it is annual financial statements or quarterly or interim financial statement, it doesn't matter. You review it. 2400 is applicable. But if existing auditor of regular financial statement is appointed to review, existing auditor of existing financial statement appointed to review, then 2410 will get applicable. So depending on who is performing the review, applicability of the review changes. Applicability of the review changes accordingly. Now, let's understand this, guys. So, first of all, financial statements are prepared as per contract. So, it is prepared as per contract. That means a special purpose financial statements. And company wants that it should be reviewed. First of all, they are prepared. It's a quarterly financial statements are prepared, and they want it reviewed from a professional accountant. Can it be done? Review can be done for general purpose financial statements or special purpose financial statement. Just like audit can be done for general purpose financial statements or special purpose financial statements, review can be done for general purpose financial statements or special purpose financial statements. So review can be for general or special. Further, review can be of quarterly financial statements or annual financial statements. If it is done by practitioner, it is covered by 2400. If it is done by auditor, it is covered by 2410. So our answer is pretty simple, straightforward. First, we should explain actually what do you mean by review. Review, first explain review. In review assignments, we perform limited procedures, limited examination procedures, only two: inquiry and analytical procedures. Depending on that, after performing that, after performing that, with moderate assurance, limited assurance, we give conclusion on financial statement. So we do limited examination procedure, and we give moderate level of assurance. With moderate level of assurance, we give conclusion. With moderate level of assurance, guys, we give conclusion. We give conclusion. We give conclusion on the financial statements. Okay, so first explain very simple, what do you mean by review assignment? Then you explain review can be done for special purpose or general purpose, quarterly or annual. Okay, and then if it is done as per any practitioner does it, you apply 2400, and if auditor does it, you apply 2410. Okay. Now, very simple. What if there is a possibility of material misstatement? See, generally in review, see, these are very simple questions, but they are going to make a case study out of it. They are going to make a case study out of it, guys. Going to make a case study out of it, and then that will become more interesting. What if there is a possibility of material misstatement? What if there is a possibility of material misstatement? Generally, we perform only two things: inquiry and analytical procedure. But if there is a possibility of material misstatement, we increase our examination procedures. Let's see, 2400 concept number. Very simple. Shortcut is PPT. The first thing, if while performing review procedures, inquiry, analytical procedures, if you feel that there's a possible material misstatement, then depending on the circumstances, how big misstatement, what is the nature of misstatement, how big misstatement, and professional judgment, definitely chartered accountant can perform additional procedures. Definitely can perform additional. So P is for possible. Yes, if there's a possible material misstatement, go for additional procedure depending on the judgment, depending on the circumstance and judgment. Okay. When you do these procedures, you can have either of the two. Either you perform these procedures to prove that there are material to prove that there are material misstatements. There are material misstatement in the item, financial item, or you prove that it is not, that material misstatement may not be present in that item. Enough evidence to prove that material misstatement are not present, not likely to be present in the financial item. You perform it either to prove it is misstated or to prove it is not misstated. You should reach one of the conclusion. Now finally, what kind of procedure? Additional procedure you can go for additional inquiry. So with existing, you can go more detailed inquiry, more detailed audit procedure. You can go to more people, ask more question inquiry. You can take more data and more analytical procedures, or other types of procedures like you do in test of details. You can go for observation, inspection, recomputation, reperformance, okay, external confirmation. You can go for these things. So PPT, if there's a possibility, go for additional procedure. Purpose should be pretty clear, either prove or disprove. And types of procedure can be additional inquiry analytical procedure and other types of procedure. So again guys, they are going to twist it, and so be careful. You have to explain PPT. So for additional procedures, go for PPT. Then it's pretty simple. Why inquiry? Why inquiry? Why they have chosen inquiry as one of the procedure? Why so? Why they are obsessed with inquiry? Why they are obsessed with inquiry? Why they want to go with inquiry thing? Okay. So there are two reasons. There are two reasons for this. First of all, management intent. The whole accounting treatment. Whole accounting treatment. Whole accounting treatment changes depending on management intention. If flat is purchased in Kashmir for over a period of time for 10-15 years, it's an investment. Accounting will change. If it is purchased in Indore for next to the factory, so that it can help helpers, it can help laborers, it will be fixed asset. If it is purchased in Chennai because we have a business of buying and selling, it is stock. So one of the most important thing in accounting and preparing financial statement is management intent. We can come to know about the management intent if we do we ask proper questions, proper inquiry to the people who have knowledge, who have executed this. We can come to know about the intent. Inquiry is the very good thing with the help of which you can come to know about the intent. But then, whatever response you get, don't rely blindly. Corroborate. Whatever they say, there is intention of, say, investment is short term or long term. Corroborate with the past evidence, whether they did something, said something, it happened like that. Understand the reason why long term investment, why short term investment, and future ability. Will you be able to hold this investment for next 1 year? When we see that you are going to be in need of money after 3 months, you will have to liquidate it. Ability. 3 things: corroborate with the past data, current reason, and future ability. Then, how much evaluation should be done with respect to responses? Depend professional skepticism. Be alert. Depending on professional skepticism circumstances, we can go for further evaluation of the responses and management intention. You should apply professional skepticism. It's very crucial while analyzing the responses. You should be corroborative and apply professional. So one of the best way to check management intent, a very important thing is inquiry. That's why inquiry is used. Then understanding entity and its environment, including internal control systems. When you want to understand entity and its environment, including internal control system, management are the best people who can explain this. Definitely you go for more evidences, but they're the best people to understand entity and its environment, including internal control system. That's why inquiry is very convenient. Inquiry is very efficient. These are the principal 2 reasons. These are the principal 2 reasons. Management intention and understanding entity and environment, including internal control system. These are principal 2 reasons, guys. Principal 2 reasons why we go for inquiry, why we prefer inquiry. Last question for this essay, then one more essay, then we are through for the day. Date of review report. Now this copy paste. So whenever you feel that in 2400, 2410, in fact the complete 800, 2000, 3000, 4000 series, if you anytime want inspiration, just think about audit. All the principles of audit are generally applicable here also. 90% time in same manner. So date of practitioner's report. We need to first ensure, just like in audit report, first we need to ensure that financial statements are prepared. Management takes its responsibility for preparation of financial statement. They sign financial statement, and then next we ensure that we have sufficient appropriate audit evidence, and then we give audit report. Exactly like that. We need to first ensure that management has prepared financial statements. They have prepared financial statement. They have signed it. They take responsibility of financial statement. Second, we have sufficient appropriate audit evidence. Sufficient appropriate audit evidence about financial statements for review. Then only we can sign it. Date of audit report, or signing audit report. They should accept their responsibility, and we should be confident about our sufficient appropriate audit evidence. Now guys, we are going to the next. Okay, guys, it should not be essay, it should be SRE. But then our team, they're so innocent. They're so innocent. So innocent, they have put essay. You also be careful. Essay is still 800 series. After that, we have SRE, SAE, and so on. Let's understand this, guys. Now, updating understanding of company. What is this? Now, when an auditor of regular financial statement, annual financial statement is performing review of interim financial statements, this standard says that a lot of information is obtained during the course of audit, a lot of information is obtained during the course of review. You can use it. You can use information of this side to this side and so on. That's the whole crux of the whole standard. That is the most important thing of the whole standard. Use information from audit to review, review to audit. Now they're saying that generally auditor is having a lot of understanding about the industry, entity and its environment, including internal control system. So when he goes for review, he simply needs to update. He simply needs to update his information. And they're saying, give us 5 procedures how he can update his information. Simply give the 5 procedures how he can update that information. That's it, updating understanding. Now it was a very long thing, so we have done our research and we grouped it so that easy to understand, remember. It's very simple. First, as a auditor, you should go to the past records and information. You should go to the past records and information. You should read them and refresh your knowledge about the industry, entity and its environment, including internal control. Refresh your knowledge. Refresh your knowledge. That is the first thing. Take last year documents and information and refresh your knowledge. Then you can perform more audit procedures in the current year. More audit procedures. You can get a lot of information from the current year. Then next you can go for inquiries and communication. Inquiries. You can do a lot of inquiries. Okay. So these 3 things, guys, we are divided in 3 things. First of all, past records. You must be having documentation of the previous year audit or prior period review, prior period review, or immediately preceding quarters review. You'll be having documentations. Obtain those documentation, read it, understand it. That can be good and refresh your knowledge. And refresh your knowledge with respect to industry entity. Refresh that. In previous year, you must have identified significant risk. Obtain those documents, read it, what was the risk and how it was tackled and managed. There must be list of misstatements, corrected and uncorrected. Obtain the list, understand. So first, see the documents. Next, you go for the significant risks. Then you go for misstatements, corrected, uncorrected. Then you go for significant financial accounting matters. So after getting your information, go to company also. What are significant financial accounting matters? From past, they must have told you significant accounting matters. Understand those significant accounting matters. Then go and read latest annual reports. Annual and prior period interim reports. That can be good source of information. So 3 documents from your side, your documentation, your significant risk and analysis of misstatements. 2 from company side, accounting practices and annual financial statements. That can be big source of information. The next is current year. You may obtain internal audit to update information or perform any audit procedures to get more information. And you may think whether the maturity level of interim financial statement should be changed. So lot of first refresh your knowledge from the previous year data. Then current year internal audit report, initially very easy. Go for more audit procedures, more information, think about materiality. You can do a lot of inquiries. Most important is fraud. Where there are fraud risk, do inquiry. Then below that business, whether change in the business, do inquiry. Then significant changes in internal control, below that internal control, do inquiry. Then how good is the process for preparing interim financial statement, do inquiry. Inquiry about fraud risk, then business activities, then internal control, then the process of preparing interim financial information. Do that, do inquiries. So I will say that first refresh yourself and then current year procedures are there and information communication is there. I think you can explain point number 2 and 3. If you want to explain both whole thing, that's fine. They are asking only 5. You can explain point 2 and 3. Any 5 they are asking for. Subsequent events. Now lovely. So the complete concept is from SA 560. We all know subsequent event. Events which are happening after balance sheet date till the time financial statements will be finalized. Events between them are called subsequent events. Okay. Now guys, now we discussed in summary financial statement, it was different. Difference of date between the signing original regular financial statement and summary, it was different. Now here, what is our responsibility with respect to subsequent events when we are doing review of financial statements? Okay. So there are certain set of responsibility till the date of review and certain after date of review. Let's understand. So it's very simple, straightforward. Till date of review, person is responsible for performing procedures for subsequent events. He's supposed to do inquiry and keep asking whether any unusual events are happening, big events are happening. So what are the nature of the subsequent events, whether there is any adjustment. So it is our response till the date of review. It is our response to go for inquiry. Okay. It is a responsibility that management has identified all the analyzed the subsequent events and identified adjusting event, past entry for that. After date of audit report, not necessary. No need to perform any kind of review procedure unless if you come to know about a very big thing, okay, which would have changed your opinion, which would have changed your opinion. That's a different thing. So generally till report we are responsible. After that we are not responsible. Material adjustments, very interesting guys. Now in compilation we said that there was no concept of modification. In review there is a concept of modification. Instead of directly using the word material misstatement, they are using material adjustments. They are using the word material adjustments. So what is the situation given? Auditor feels that certain items, income, expense, asset, liabilities are misstated and it's a material misstatement. Material adjustment should be done. They have informed CFO, management. They have further informed audit committee also, TCWG. But there is no response from them. No response for them. That's considered very bad. See, if there would have been response from them and they would have said that, okay, we don't want to do it. We think about modification, qualification and adverse. We simply think about qualification and adverse, that's it. But then here situation is different. They are not responding. In fact, in the question they have written, they are not responding. So when they are not responding, situation deteriorates. Either we modify the report, okay. Because there is a lack of information, we may go for qualification or disclaimer, modify. But because they are not responding, we may withdraw from the engagement. We have lost faith in this client. We have lost faith and interest on this client. Let's withdraw from the engagement. Let's not do review. And if we have lost faith on the integrity itself, we may resign from the annual audit of preparing financial statement. Very interesting guys. Very interesting. Okay. Very interesting that if they are not responding, either we modify or withdraw from the assignment, or we may resign from the main audit assignment only. Problem arises in review and we are resigning from audit assignment. Okay. So three things are available with us. If they don't listen to us in material adjustment, we may go for three things. Last question guys, a very beautiful question, interesting question. Now what they're saying that there is a massive disruption. There is a massive disruption. There's a big fire. There's a big fire in the company, massive disruption. A lot of assets were uninsured, and there are substantial losses. There are substantial losses, huge losses. They're disclosed in interim financial statement. So first of all, you're supposed to explain, okay, if there's a material, so this should click. Huge losses have happened, huge losses, complete loss has happened. So they are treating it as a material uncertainty. Now, so it creates situation where that going concern depends on happening or non-happening of future events. So we declare that in this situation, there's a material uncertainty depends on happening or non-happening of future events. There's a material uncertainty or going concern. There's significant doubt or going concern. Now listen guys, 800, 2000, 3000, 4000 series. This is based on old SS700 series. Okay. So as per old essays, wherever there was a material uncertainty of going concern, they put EMP. In new essay, they say that put MUGC. Put MUGC. Material uncertainty over going concern. Earlier, they said that if there's a problem with going concern, there's a material uncertainty of going concern, you're supposed to put EMP, emphasis of matter paragraph. So that's a big change, guys. Because it is based on old 700 series, because it is based on old 700 series, they are saying that material uncertainty should be disclosed, and you will have to say the same. Not MUGC. You're supposed to say that we are going to put in emphasis of matter paragraph. There's one more thing, very interesting, one more thing. When they write EMP, they are saying that they are modifying the opinion. Now again, earlier there was a concept. If you put EMP OMP, they used to call it modified report. They used to call it modified report. And when you put qualified advert disclaimer, it was called modified report plus modified opinion. That's why they are writing, they will put EMP and modify the review report. And that is absolutely fine. I hope you got. Earlier they had the concept, old SS700, modified report and modified opinion. This used to be two different things. So you will say that in this scenario, you will going to put emphasis of matter paragraph, explain all the fact details, what's the issue, what's the problem, and it will be a modified audit report, not modified opinion, modified audit report. Okay. So guys, these are lovely questions. You give reference of the standard, explain the concept, then you discuss the case, and then you conclusion. In conclusion, EMP should be there, emphasis of matter should be there. Okay. So guys, we are through with one more chapter. Let's stop here, guys. Let's stop here. Guys, go for cumulative revisions and cumulative overview. These are very, 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 very important questions. Very important questions, guys. If you're loving it, keep liking it and put your comments. Your comments matter a lot on our videos. We like it a lot. We love it a lot. So you can put those comments on our YouTube videos. Bye bye everyone. We'll meet at tomorrow. Tomorrow we won't be having class. Day after tomorrow we'll be having class, and most probably again a morning class only. Stay connected to Audit Guru channel. Stay connected to Audit Guru Telegram channel for all the updates, all the latest updates. Everything will get there about the class also.